JJ the CPA here. We're going to talk about miscellaneous itemized deductions. And I'm telling you this right now, if you have had these in the past, you better focus in. When you get done watching this video, if this is the first time you've heard of it, and I bet it could be, you pick up the phone and you call your CPA. And if you don't have a CPA, you need to get one now. Why? Because in 2018, under the new law, miscellaneous itemized deductions are gone, out. Zero is allowed because it doesn't exist anymore through 2025 under the new law. That's for 2018. What's in miscellaneous itemized deductions? If you have a job and you are in a situation where you have to pay expenses out of pocket, you would probably know right now that you are going to have a major shift in your taxable picture because there's no more of that allowed. So what am I talking about here? I'm talking about if you have mileage, travel, cell phone, computer that you're incurring, you're paying for the benefit of your employer. In essence, you have to have it for your job. These are business employee expenses that in the past have been deductible. Mileage beyond the commute. But here's what else is included in that. Accounting fees, no longer deductible on your personal return. So if you own a business, pay for all of your accounting CPA fees through your business. Shh. You didn't hear that from me, okay? But investment advisors don't get to deduct those fees anymore. Maybe you're not aware of it, but if you have an investment advisor and they get a percentage of whatever your assets are, which may be great for you, you don't get to deduct that fee anymore. IRA expenses, no more deduction. Safe deposit box, no more deduction. Legal fees, not deductible. Any kind of professional fee that you're paying that would be a miscellaneous itemized deduction to protect your financial interests are no longer deductible. Legal fees related to protecting your financial interest, also including estate planning fees, no longer deductible. If you're incurring a legal fee to sue somebody personally, no longer deductible. Miscellaneous itemized deductions included a lot of different kind of expenses that maybe normally you weren't really paying attention to because it had to exceed 2% of your adjusted gross income. And so maybe you really weren't getting a benefit. So even though I just whispered a secret to you, many of you, maybe you were able to put on your tax return your accounting fees to have your tax return prepared, but you may not have been getting any kind of benefit because if that's the only expense that you had, it probably didn't exceed 2% of your income. But nonetheless, if you had accounting fees and legal fees and IRA fees and financial planning and IRA custodial fees, and then you also had out-of-pocket expenses related to your job, whether that's mileage or cell phone or computer, home office related to your job, none of that is going to benefit you. So you could be in a situation, I'm telling you right now, if you think, well, it's not a big deal, it is a big deal if you have benefited from it in the past. Here's why else it's a big deal. In 2018 and 19 through 25, the standard deduction, now it'll be adjusted for inflation, but the standard deduction for 2018 is $24,000. So in the past, your itemized deductions probably exceeded whatever the standard deduction was in the past, whether in 2017 it was lower or married filing jointly, it's now $24,000, single is $12,000. But in the past, if you had those, I bet your itemized deductions would be higher than the standard deduction because you might have $9,000 of miscellaneous itemized deductions, and then when you throw in charitable and real estate taxes and mortgage interest and your state tax if applicable, and maybe your medical expenses, you add all those things together, that may very well be over $24,000. But if all of a sudden we're taking out your miscellaneous itemized deductions, you might be less than the new standard deduction. And then know this, if you're in a state where they've got limited, if you're in a state that has state taxes, and then you're now under this limit where you're only able to deduct up to $10,000, including your real estate taxes, you might have a double whammy because you're limited on those taxes and then no miscellaneous itemized deductions. Now you're in a situation where, why is it a big impact? Because you don't have as many deductions
coming into your tax return. If you're not sure about this, here's how you would probably know. When you're doing a tax return, and if you're doing it by yourself, stop doing that and get yourself a CPA. Or if you're with a CPA and you're gathering up the documents, you would know that because it'd be all these miscellaneous expenses. You're getting the scratch paper out and you're putting mileage down and the cell phone and all that stuff. So if you're an employee and you were doing that in the past, you don't got that anymore. What you would want to then be aware of is what's going to happen in April. Am I going to owe now? Am I have less of a refund? You would want to know that now, not waiting until April. So get in the know. All right, hey, thanks for tuning in. I'd love it if you'd subscribe to my videos on YouTube. And then don't you ever forget, you've never met a CPA quite like me. Don't you ever forget, you've never met a CPA quite like me.